activity-based costing also absorbs total fixed overhead cost, but it does it in a different dimension. It does it in a way that is totally different from the way absorption costing does it. So we say activity-based costing is based on the following ideas. In a modern manufacturing environment, a large proportion of total costs are overhead costs, and direct labor costs are relatively small. Of course, overhead cost usually is the largest. Direct cost is always different. Don't forget the difference between these direct cost and overhead cost. Direct cost is if I have a company now and I produce snacks. So I do fish roll, I do egg roll, I do the mince pie, and I do donuts. Those are the snacks I produce. Direct cost of donuts will be the flour I used in producing donuts. If there is any other ingredients I put in the donuts, that will be direct cost of materials for donuts. And then the labor cost for donuts is also a direct cost. If I have somebody that mixes the donuts separately and the person is paid certain amounts per day, or I pay the person based on how many donuts the person can produce in one day, that will be a direct cost of donuts. The same thing will be for meat pie. The same thing will be for egg roll. The same thing will be for sausage. Now, those are the direct costs. Then if there are overheads that are direct, then we can also have overheads that are direct overhead costs. Direct overhead cost is okay. I have it's a company, or maybe I use a 3-bedroom flat for the company. The room where they prepare sausage is different from the room where they prepare donuts, and from the room where they prepare meat pie. Let's say I have different rooms for them. Now, each of those rooms, they use electricity differently. They consume electricity. So the electricity that is consumed in producing donuts in his own room, based on his own consumption, based on his volume, is the direct overhead cost to donuts. The one for meat pie will be for meat pie too. But then we now have general fixed overhead costs. So let's now say this company has accountant, it has a manager, it has sales rep, and then we have also offices for all these people that is different from the offices where we mix the donuts, and we pay rent for the entire office, and those offices also use electricity. We pay electricity that is for the entire office as a whole, apart from this direct room where they produce all these things. All those ones are what we call fixed overhead costs. Why are we calling them fixed? Because whether we produce meat pie or not,